Hello, my name is Sam Ash. I'm the CEO of Hill Mining Company, and we are in the process of restarting one of the iconic U.S. lead, zinc, silver mines located here in northern Idaho in the Silver Valley, and it's a pleasure to speak with you all today about that.
Sam, thanks for coming on the show. First time we met or spoken, so I do appreciate that. We'd like a news story here. So you used a word there, which I think we need to kind of understand. What's a restart? People talk about restarts and retreads and reboots and so forth. What have you got?
Well, absolutely. So the Bunker Hill silver mine, or lead, zinc, silver mine here in northern Idaho, was discovered in the late 1800s, operated continuously for 100 years, and was an absolutely integral part of the Industrial Revolution in the United States through 2 world wars as well. Primary producer of lead, zinc, and silver. Historically, it had a lead smelter and a zinc plant. Because of environmental regulations changing and environmental performance, it was shut down in the 1980s. And Bunker Hill is looking to restart this mining operation and bring back, really what is one of the iconic U.S. mining stories back into production.
Okay, so what did you inherit? What gives you confidence that there's enough there at today's prices to be, one, economic, and two, produce at the scale that it may have done in the past?
Yeah, absolutely. So, when the mine went into closure, it's important to understand the narrative around why it went into closure. When the mine went into closure, still had 10 years worth of reserves, SEC compliant reserves on the book. The mine was still economic, and it was really shut down for economic or for environmental performance reasons. So when we came in and we looked at it, we have 100 years worth of historic information. Over 3,500 drill holes. We have all of the geology maps that were made meticulously on Mylar over that 100-year period. We were able to digitize all of that, put all of that together, and that really led us in the right direction. And it just jumped off the page that, look, there is a lot of life left in this deposit.
Right. Okay. So give me more on the data there. I mean, 10 years. Life of mine, what does that actually mean in terms of the scale of this? What do you think you've got?
Yeah, absolutely. So, we're looking at right now our resource is 6.7 million tons in the measured and indicated category, 6.6 million tons in the inferred category. We expect a lot of that inferred to convert at a relatively high rate due to the nature that it was actually a historic reserve. The grades are really pretty good. 5% zinc, 3% lead, an ounce and a half silver. That puts you in the 9.3, 9.4% zinc equivalent range. That's a really robust grade over those tonnages. And because of the nature of the mineralization, a little bit unique in the Silver Valley, we're able to use bulk mining methods and get that production rate up, 1,500 tons a day plus.
Right. Okay. So I'm going to skip through a few topics, and I'll come back to others in a second here, because I want to understand the kind of thesis for why you go into this. Right, Idaho hasn't got the best reputation. There's a few companies that have been waiting around for licenses and permits for a long time, who've been on the show. Historically has been. What's it like now? I mean, this is a site which shut down, needs to be cleaned up, and in the environmental environment today seems a lot more. A lot tougher, a lot more robust than perhaps it was in the 80s. So again, what's giving you the confidence that you can get this thing into production?
Yeah, absolutely. And that goes kind of right to the heart of the kind of the thesis and the strategy of Bunker Hill as a company. There's a really important distinction in regulatory environment in the Western United States. Okay, so if you're on federal land, you fall under a process called the NEPA process. Okay, now that's quite an involved process and can take a decade or more to work your way through. But there are all across the Western United States, a number of deposits, Bunker Hill being one of them, that's on patented mining claims and private land. Now, if you're on patented mining claims and private land, you fall under the state regulatory authority. So even within Idaho, there's I would characterize it as there's 2 categories of regulatory environment that you're dealing with and working with. And Bunker Hill is from a time perspective under the more favorable of that, which is on private land. Patented mining claims falls under the state of Idaho Regulatory Authority. And the state of Idaho is a very strong proponent of responsible development and resource development. So that's very helpful. Now, under that context as well, Bunker Hill is an EPA Superfund site, which can be a little scary when you look at it at the start, and before you peel back the layers of the onion, you really come to understand the nature of the challenge. So what's important to understand is that in 2017, there was a consent decree reached with the EPA, and it settled all historic environmental liability at Bunker Hill. So the site essentially has a clean bill of health on a go-forward basis from an EPA perspective, which is critically important.
Right.
Now under that, the previous owner of the mine was not able to make water treatment payments. So we do have a payable that will be paid back out of cash flow to the EPA for historic water treatment. But essentially, what sets this apart and what makes this project so interesting from a regulatory perspective is it falls under the regulatory authority of the state of Idaho. It's on private land and patented mining claims, does not require to go through the NEPA permitting process, which means that we can advance the project at the pace that we can from a technical and a financial standpoint.
Gotcha. Okay. Thanks for that. That's fairly thorough. Okay. Patented and private. I guess you're in the right space. But what's also happening out there is a lot of kind of social media kind of activity, NGOs up in Canada, and I guess, and the US. We've kind of got First Nations issues as well, and these groups are causing problems across the states, across North America for mining companies. And even the government's talking a good game, but not actually, it would appear, delivering. So again, in that environment, how do you sort of, what are the hurdles you need to overcome? What are the obstacles you need to swerve around to get this thing, not just having a clean bill of health, but actually being able to move forward without hindrance?
Well, absolutely. And when we came into this project, it was absolutely with the understanding that you're coming into an environment that has a poor track record environmentally, to say the least. We're coming into a community that, when the mine went into closure, entered a period of severe socioeconomic stagnation. This is really about regenerating a whole socioeconomic challenge area in the United States, and people are very conscious in the local community of not only the consequences, but the benefits that mining has. There's still a very strong mining culture in the Silver Valley, and really it's about being on the front foot and making sure that we're being very, very transparent with everything we're doing, and we work very hard at that in the local community, and really moving the project forward in that manner and keeping an open dialogue and communication allows and enables the regulatory authority to be more open and able to work with us to advance the project.
Right. Okay. It is tough. It is very, very tough all over the world. This isn't an Idaho thing specifically, but it's each jurisdiction has its own challenges. Can I talk to you about money? Because you made an announcement in December about $50 million finance package. You talk about a $8 million royalty convertible debenture. You've talked about $15 million worth of equity in April, and then recently in June you kind of announced a $15 million convertible debt fund. There's lots of conversation about money. How much of that actually happened, and how much money did you get in, and what type of money was it?
Yeah, absolutely. So to start with, we announced in December the $50 million financing with Sprott. Okay. And as a part of that, there was also an accommodation for an additional $15 million of permitted indebtedness. And where we are right now, where it stands today, is the the $8 million for the royalty. The royalty convertible debenture has been received. The $6 million for the convertible debenture. And then just recently, Sprott came in and decided to take that $15 million of additional permitted indebtedness themselves. Okay, so that's what's in the door now, and we expect that by over the next month or two that we will finalize and bring in the final component, which is the $37 million multi-metal stream.
Right. So a lot of money's come in. Market cap today, what, 32, 35?
Yep.
That sort of level. So someone's not listening to what you're doing. Is that the case? I mean, do you feel frustrated, or do you feel that actually everyone involved that understands where we're at and the market will reward you at some point?
Well, look, there's a couple of things there. I think that absolutely we would love to see that the stories getting a little bit more traction, getting a little bit more excitement. But I think when you look at it in the context of particularly a junior mining market that has been absolutely crushed over the last 4 or 5 months, when you look at it in that context, you actually see that we have some pretty strong support. And I certainly know that when we go and talk to our major shareholders, there is strong long-term support and belief in the project and the story.
But are they strong? Are they strong and long because they're underwater, or are they strong and long because they feel that you can turn this around? Because it's 30% is retail, the rest is wealth management. Was it between 6 or 8, and the rest of it's institutional or high net worth, right? So you got some big blue chip names in this thing, but why are they there? How did they get into this?
Well, I think there's a couple of reasons. I think that we are a unique story from the perspective when you look around the mining environment in the Western United States. We're one of 2 or 3 projects that is actually going to come into production and produce metal within the next 18 months. Okay, that is very unique. We are not a kind of a long-term exploration story. We are a story that is going to produce metal and be generating cash flow in the very near term. I think the other.
But how did they get into it? Can you, talk me through, Merck and Ruffer and Value Stone and Tech and Hummingbird and, God knows who else. It's a kind of extraordinary for a company of your size to have that much, meaningful institution in there and that little retail.
Yeah, absolutely. So, I think a lot of that comes to the team that's in place. So, our executive chairman, Richard Williams, he was a former chief operating officer at Barrick. And he was brought in by John Thornton to execute an operational turnaround for Barrick, and over kind of a 3-year period was able to double the operating margin in a declining metal price environment. And of course, I was part of that team. I was running the Lumwana mine in Zambia, and we had a pretty significant turnaround there. Going from a highly cash flow negative operation to one that was stable, steady, and had a bright future. Brad Barnett, our vice president of sustainability, was the former head of global closure at Barrick, so has a very strong track record of, regulatory interaction and engagement. And then Dave Wiens, our chief financial officer, comes from a background with SSR, and everybody knows the successful story of their growth trajectory. So when you look at the team, we all have obviously, connections that are useful. But I also think that track record and then the vision we laid out of coming and building an operating mining company focused on regenerating and bringing life back into historic assets, in the Western United States, really kind of resonated. And that track record of being operators and builders, is a big part of that.
Okay, I caught all those names as they fell to the ground, but those are big blue chip names, big backgrounds. But this is a small junior, 35 million market cap today. I know the market's come off, but you get my point. You've got to play it differently. You've got 30% of your shareholders, your shareholder is retail, and that's usually the thing that drives liquidity. And the way that you're raising money it doesn't really kind of let them into the game, as it were. So you got to get that balance right. So how does this move through the phases going forward? Because you're going to want to raise cheaper money by having a higher share price going forward. And you need those retail guys in there, or you need to increase the liquidity somehow. So what's the plan?
Yeah, absolutely. And I think that, when we look at Bunker Hill, it's really, this is the first step. This is the cornerstone asset of what we see is going to be a multi-asset company in the very near future. We see the opportunity to repeat the success that we're having here at Bunker Hill across an array of assets and build a portfolio of assets. So I think that's key. And then absolutely getting to that point where, the Bunker Hill can act as that cornerstone asset and bear a lot of the cost of that growth trajectory is really the strategy going forward.
Right. I'm not sure that answers my question, because I think in terms of cash and your access to cash, it's great, right? And you also got warrants, 168 million warrants at 48 cents. It's all good, but it's the type of money, I guess, that is what I'm sort of interested in terms of how this thing builds out. Otherwise, it may as well be a private company, quite frankly, because it doesn't sound like you've trouble reaching capital. So how do you manage the size of this thing today and driving that growth story? Acquisitions is one thing. Well-funded acquisitions is one thing, but it feels like you're sort of doing it with your arm tied behind your back a bit.
Well, I think that when you look at what we're doing here today, getting out there, getting the story out there. I think that if you look at the website and you look at the amount of information sharing and the transparency that that we're showing about progress and progress updates, getting out there across multiple kind of social media platforms, attending conferences, and really just bringing the attention and light to what is a pretty interesting story, and looking to differentiate ourselves and focus on the aspects of the projects that do differentiate ourselves.
Which are what? The fact that you guys are mine builders or successful operators, that you can get cash, that you've got an asset which you're going to restart, and you can find more. I mean, is that it? Big team has done well, will do well. Trust the quality of what we've done before. Is it as simple as that? Yeah.
Well, I think that some of it is the team, but it's certainly it's not about what we did yesterday. It's about what we're doing now and what we're doing going forward. There's no doubt about that. And I think that it is around that strategy and that vision, which is we're going to take a phenomenal asset and we're going to put it into production. And that's going to be the cornerstone that's going to allow us to really go out there and repeat that success. And we see tremendous opportunities. And I think you can see that in the joint venture that we're entering into in Colorado. Colorado's another phenomenal jurisdiction. It has a lot of the same characteristics. It has a long mining history. It has, world-class mineral endowments. It has endowments that are on patented and private land, and we see a lot of potential and opportunity there. Particularly with our business partner that we're working with down there. I think that there is opportunity to create a rather steep growth trajectory.
Okay, and what? Well, let's go back to Idaho, if you don't mind, because I want to understand the types of assets that you're looking for, whether it's kind of cookie cutter approach or it's a case of we'll take whatever we can get our hands on. Because in terms of the numbers, it's a low capex, quick payback period, all that kind of good stuff. And you talk 10, 11 years life of mine potentially, and these things tend to grow as you do more work, and it's only PEA stage, but it's not a big project today, is it?
No.
Right. So is that indicative of what you're going to look for?
Well, I think that's actually what you're going to see kind of across the mining industry, really. When you look at you look at metal demand, continuing to grow, and actually, the world is just now beginning to recognize, actually the quantum of metal that's going to be required to make a green energy transition. And then you look at the deposits that are available. I really truly believe that you're going to see fewer and fewer of the, $4 or $5 billion capex projects in risky jurisdictions, with questionable economic and social outcomes. That's going to become further and far between when you see that. And I think that there's an appetite for capital to look at projects that are smaller in scale, easier to execute, and really of a different type of scale, that are really kind of focused on integrating into the community, integrating into the environment, easier to permit, easier to advance. And it's going to take, quite honestly, a lot of those to meet the metal demand. And I think you're going to see, and I think you're beginning to see, the mining industry begin to change a little bit in that regard.
That's an interesting thought. It's a really interesting thought, especially given the background of the team. Barrick came through loud and clear. I would not have guessed that. So that's an interesting thought, and that's a way of kind of, is that kind of defense strategy in terms of the environmental and the ESG more broadly. You feel that's what states are looking for, provinces are looking for. I mean, big mining companies want big projects because they get the scale, they get their efficiencies and so forth, but they take a little bit longer.
They do take a little bit longer, and the quantum of risk that capital is taking on is on a whole nother order of magnitude. I mean, when you look at some of the projects and the scale of the capital that's being deployed, and then the quantum of risk associated with that. And, if there is an adjustment or a change, it can very quickly become existential risk, even to some of those very large, very well capitalized mining companies. And quite frankly, I think that there's a different model and a better model out there, which is to look at projects that are, smaller scale, have excellent returns, and are, at the end of the day, easier to execute and generate a better outcome, both economically and for the local community.
Interesting. Risk adjusted return on capital invested. Nice. Okay. My buyer. And talk to me about obviously you picked up a plant recently, didn't cost you too much. Where does that fit in the plan? What's the timing? And, is that a liability in the sense that you now need to spend some money on it? And what's the whole picture look like?
Oh, I don't think it's a liability. I think that's absolutely a strength and a huge de-risking event for us here. When you look at a process plant, we purchased the process plant from a major, who's on our shareholder register now, Teck, and they are a top-notch company. And when they put a facility into care and maintenance, they truly maintain it and take care of it. And it's 140 miles away. I'm looking out my window right now, and the demobilization is largely complete. The 4 ball mills are sitting out just across the yard. And then I can see them now. We have the full differential flotation circuit that we've brought over, and it's really ideally suited. That plant was operating at 2,000 tons a day doing differential flotation for lead zinc, and that's exactly what we're going to be looking to do here. That's gone exceedingly well, and actually accelerates that timeline to free cash flow tremendously. When you go out there and you're looking at acquiring a new mill, the waiting list now is 2.5, maybe 3 years to get a processing plant constructed, work through the supply chain logistics, and then all of the uncertainty that comes around cost inflation along the way. In that acquisition, we created an enormous amount of certainty as opposed to unknowns and risks. So we're seeing that as a huge de-risking event for the project and the company.
Okay, and talking about managing risk and cost of capital, something that we've mentioned. I don't know what your blended average is on the 3 sets of convertibles that you've got out, but I suspect it's slightly over 9%. Do you and that's unusual for a company of your size, unless they're pretty darn sure that they're going to be able to afford the coupon on that. Or they're going to be able to refinance that out in the near term. So have you got what the terms on there? Is there a holiday period, or are you shelling out now?
On the
converts.
Oh, on the converts. Yeah, they do bear interest in the convert. The first convertible date is actually structured to be repaid out of the stream. Okay, and then the second convert has a 10-year out to 2025 and has a convert price at 30 cents a share.
Yeah.
So yeah,
But that's the point is, you've got to be. There's a cost to that money, and there's a risk to that money, and you've made an assessment that you're so sure of being able to get into production and get into revenue or ramp up and into revenue that you're comfortable with those numbers, right? And that's all I'm asking, really, because most people wouldn't be brave enough to do that.
We're very comfortable with those numbers, but what we're really excited about is being able to have access at a lower cost of capital because of demonstrated success and having an asset that is in production. We would absolutely like to see a lower cost of capital, and we expect to see a lower cost of capital as we move forward. But we're certainly absolutely comfortable with what we have at the moment.
Okay, should we bound on down to Colorado? You started telling us about it there. What's that JV look like, and who's it with?
Yeah, so it's kind of an interesting story. There's the MineWater LLC, which is our JV partner there, consolidated a historic mining district in Colorado by coming in and solving a water quality challenge in conjunction with the state of Colorado. And in exchange for that, they were able to consolidate both the land package and the mineral tenure. Again, private land, patented mining claims. And they were able to subsequently monetize the water asset. And what they're joint venturing with us for is to begin to exploit and unlock the mineral potential of that asset. Just a little bit about the district. It's a historic mining district, 650,000 ounces of gold produced pre-World War II at around 23 grams a ton. So, so really, somewhat small scale, but again, pre-World War II, there was a lot of dynamics in the gold market at that time, and all across the Western United States. There's a lot of deposits that were closed solely because of kind of that gold dynamic and monetary policy decisions around World War II that are really kind of interesting in today's world. It is an exploration project. We're going to be looking at advancing, starting much the way we did right here at Bunker Hill, which is taking all of that historic geologic data, hand-drawn maps and geologic maps, production records, and digitizing that, getting a good 3D geological model, identifying exploration targets, really starting from the ground up. But it is in a really well mineralized mining district. It's about 5 miles as the crow flies from the Climax molybdenum mine. It's just over the mountain from Leadville, Colorado. So we're in an area that has a lot of mineral potential, which is really pretty exciting.
Right, and how much money are you allocating to that over the next 24 months or 12 months, 24 months?
The joint venture calls for us to make an expenditure of $4 million over the first 3 years of the joint venture.
Gotcha. Okay. Interesting. So right. So it's not kind of it's not hanging over you. I mean, kind of like the EPA. You paid the first 2 of the 19 million down, and then is it roughly like a couple of $1 million or a year? No, $3 million a year after that. So it's not a massive overhang in terms of your plans. And can you remind me from the PEA, what does it indicate that you'll be throwing off in terms of cash? Accepting it is just a PEA.
Yeah, absolutely. We're at an asset level. You're looking at 15 to 25 million a year in free cash. Out of that, you have stream payments and royalty payments to the EPA. That leaves us, with that, 5 to 10 million a year free cash at the end of the day going to Treasury.
Okay, so I guess it's a building block. Is that how you're viewing it? Because like I say, it's not a big project, but if it's giving you somewhere between 5 and 10 a year for a period of time, that allows you, I guess it gives you a bit of freedom in terms of the G&A to come look at other stuff and then worry about how you finance it later.
Yeah, and there's a couple of aspects that when we look at it, why it's interesting to us. Number one, it's an asset you can get into production and get into free cash flow quickly. So that's what this plan represents, is the fastest, route to free cash flow. Beyond that, there's a tremendous amount of upside potential, both through, the expansion of capacity, but also through a transition and a pivot, towards silver. So historically, the Bunker Hill mine, it was the third largest silver producer in the Silver Valley, produced 165 million tons. Now, I'm sure everyone will recognize it in our resource and in our mining plan, it's very zinc dominant, particularly at the start. But that's a huge opportunity to lever up, that cash flow by targeting and focusing exploration and resource development on bringing more silver into the plan. So that's another lever that that we see we can increase the value of Bunker Hill. And then the third one is really that mine life extension. We're dealing with a area of mineralization that successfully operated a mine for over 100 years. They never explored at depth. At the lowest level of the mine, is at the 38 level, around 4,000 feet. That makes it really the shallowest of all the major mines here in the Silver Valley. And they never explored at depth because they never really needed to. They always had 10, 15 years worth of reserves in front of them. Yeah, and we're really excited about the opportunity that down dip potential has for us here at Bunker Hill.
Right. So I want to be clear with the strategy before I leave you, which is, it's a nice, perfectly formed small project which may throw off 5 to 10 free cash for you, covers your G&A, and some, one would hope. You're going to look to try and extend the life of mine of that project, but it's still going to be of a certain size, which is not going to be that interesting. Something you said earlier, which was more interesting in terms of growth, was, and a lot of companies come and say it, not many companies actually mean it, which is M&A, finding a project as you described earlier, and doing multiple versions of that. That says ambition, and I sort of want to know how do you get that balance? So, are you more towards let's just focus on the life of mine extension at Bunker Hill, or is M&A genuinely a big part of the growth story going forward?
Oh, M&A is definitely a big part of the growth story. And when you look across the resource space, there's dozens of companies that have assets that that are moving from that exploration phase into that development phase, and that's a difficult stage to go through, and that with Bunker Hill is going to be demonstrating that we are kind of the premier team to take an asset from that exploration phase through that development phase and into production. So when we look out there from an M&A perspective, it's there is a lot of interesting opportunities that exist with late stage exploration projects that are really looking for a team and the capability and the know-how to take it through the next phase of value creation.
And access to capital.
Yeah.